Excel accounting practice problem. Reversing entry related to accounts receivable, sales, revenue, or income. Get ready because we're about to excel. Here we are in our Excel worksheet. In prior presentations, we put together the worksheet from a blank sheet. Now continuing to enter transactions into it if you have access to it. There's two tabs down below, an example tab and a practice tab. The practice tab starting out where we left off last time. The example tab in essence being an answer key. Let's take a look at it now. In the prior presentation, we put in an adjusting entry, which is kind of like a cutoff type of adjusting entry, focusing down here on sales, looking at a situation where an invoice had been put into the system after the cutoff date in March. In our case, the financial statements being created as of February 28th, for which the work was actually done before the cutoff date. Therefore, under the accrual basis method, we should be pulling that revenue into the current period. We're going to do that and did so not by going into the accounting system like a QuickBooks system, for example, and just changing the date on the invoice, because that would kind of adjust or mess up the normal accounting process, but instead making a journal entry and adjusting journal entry as of the end of the period to put the correct balance in place, recording the revenue at that point and the related other accounts that were going to be impacted, including the inventory and the accounts receivable and so on and so forth. Now, of course, we have the problem that the invoice, in essence, or at least the journal entry related to them, has been entered two times. It's correct as of the cutoff date, which is March 28th, the end of February, but will be entered twice as of the time that original invoice was put in place, and therefore we're going to have to do a reversing entry. The reversing entries we always want to put in there as of March 1st. That's going to be our reversing entry situation. Now remember, as we entered the adjusting entry, we had a couple accounts which we're more concerned with as we entered. We had the accounts receivable, which has the subledger that we got to deal with by customer. Some accounting software such as QuickBooks will not let you post to the accounts receivable without posting also to the subledger, something we would like not to do because we don't want to mess up the subledger for the accounting department as they're tracking the invoices by customer. But if we're forced to do it, we added another customer in order to look at the subledger. We also have the sales tax payable that has a widget oftentimes to track the taxable items when you're dealing with taxes in software that we want to be careful about. And then we've got the inventory, which also has a subledger. Most accounting software not requiring you to enter when doing a journal entry to an item in the subledger. Therefore, we did not do so. We're out of balance from the subledger by the $400 until we do the reversing entry, which we will do this time. So let's go back to the practice tab, and let's first just think about the journal entry that would be put in place with a reversing entry. Now, it's kind of like a credit memo, similar to a credit memo type of thing, whereas you're basically reversing what would happen on an invoice. So the way you want to do that typically is to actually first look at the adjusting entry, of course, and then reverse it line by line. And again, I would not try to put the debits on top, just like we looked at with the last reversing entry, but instead just reconstruct this thing top to bottom and then just put the debits into the credits, reverse the debits and credits. So first, let's go ahead and unhide some cells on the right-hand side so I can see my unadjusted or my reversing entry. So I'm going to go from AO to AS, right-click and unhide those cells. This is where our reversing entries will go as of the first period of the next month. And then I'll just reconstruct my entry down here. This is going to be as of 3/1 because it's a reversing entry. We went and put REV for reversing entry. I'm just going to copy the same accounts. I'm not going to try to reframe them for the debits to be on top. Just going to say the same thing, just copying these on down, top to bottom. I think this is the easiest way to do it, especially with a longer entry like this. And then we're going to reverse the debits and credits. So this was a debit up top to accounts receivable. Now it's going to be a credit. But that's weird. You got the credit on top. That's okay, because it's easier to see this way. It's okay. Then we got the sales tax payable. It was a credit before, so we're going to debit it now. So I'm going to say negative of that number. And then we've got the sales. It was a credit before. Now we're just going to debit it, doing the opposite thing to it. Cost of goods sold before was a debit. Now we're going to credit it, doing the opposite thing to it. And then the inventory was a credit, so we're going to debit it, doing the opposite thing to that one. So there we have it. And so now let's just record this out. As I record it, I'm going to record it into the outer column on the right-hand side, into the reversing area. I'm going to select this one just to keep our eyeballs on it. We're focusing in on the top set of accounts. We're going to go up to the accounts receivable, the AR, make sure we're in the proper area, the reversing. You could hide these first two columns so you don't mess up and post to the wrong column. It might be, you know, I won't do it now, but just be mindful that you could do that. We're going to go over here to the AP and just try not to mess it up. And we'll scroll down. This is AR and try not to mess it up. So there we have it. So it was at the 22,176, and then we increased it to the 22,701, and then we decreased it back down to the 22,176. And then we've got the sales tax payable. Sales tax payable is going to be down here. Sales tax payable. We'll post it into this column, AP. This is going to be equal to, and we're going to be picking up the 25. So we'll pick up the 25. So we put the 25 in for the adjusting entry, bringing it up to the 579. Now we're going to take it back on down to the 554. And then we have the sales down below. The sales is going to be down here. We're in AP 26 equals the sales line item. Enter. So now we had it from the 57,951. We credited it to bring it up to the 58,451, and then we closed out the income accounts. You can see here they're closing out here to the equity section. So now when we look at just what is happening for the month of March, we've got a negative sales in there. Again, that looks funny. You're going to say, well, it shouldn't be a negative sales. The sales should go up in the credit direction. But it will be correct as of the point in time that the invoice was entered, because the invoice was actually entered sometime in March. We're not going to try to reverse it as of the day that the invoice was entered in March to try to get it more precise, because we want all of our reversing entries to be in there as of 3/1. But you can imagine this entry up top is the entry that was the actual journal, the same entry for the actual invoice entered in March. Once this has been entered, the 500 here will net out to the 500 there, and it'll bring it back down to 0, which is where it should be, because we actually recorded it in the current month when the work was actually done before the cutoff date. And the same is going to be with the cost of goods sold. So let's unbluify this item up top, or ungreenify it. I'm going to make it blue. Cost of goods sold is going to be down here, same kind of thing. We're in AP 28 is going to be equal to, and we're going to be picking up then the 400. Now this one, we were at the cost of goods sold 45554. Then we brought it up because it's an expense to the 45954 before the cutoff, making it correct as of the point in time that we made the financial statements. Then we brought it back down, which is weird to have a negative to cost of goods sold because it usually only goes up. And now you got this negative number in cost of goods sold because we closed out the income statement to the equity section. So if we're looking just in the month of March, we've got this negative cost of goods sold, which is funny looking. But it'll be correct once we actually record the normal invoice, which will be the debit to the cost of goods sold, netting out at that point in time to 0, making the actual recording in the period that it should be recorded, because that's when the transaction was made or the revenue was earned, which is in the prior period. Okay, so that's the whole thing. That then we need the inventory. Lastly, the inventory is going to be in AP 7 equals, scrolling down, and we pick up the inventory. So we had the inventory was at the 4746, and then we brought it down to the 4346, and then we brought it back up to the 4746, and then it'll go back down again when the actual invoice was entered in March, whatever the date was in March. But as of now, as of this point in time, we're back to where we started from. So now let's just kind of review the subledger. We might not post to the subledger because we're going to keep the subledger basically as of 2/28. But let's just consider the accounts receivable where we stand now. Remember, the accounts receivable, we kind of mirrored what you would expect to happen in the QuickBooks software, meaning we posted that first adjusting entry way over here to the AR subledger broken out by customer. We didn't put it into Anderson here, but instead we put the adjustment down here to this customer. Then if I had the reversing entry, we would record it right here, and that would net out. Now again, notice the problem. Like you might say, well, why don't I just put that in Anderson? It'll net out and it'll be fine. Well, one, it'll show up on Anderson's detail, which could be confusing when you're trying to run a detailed report for Anderson, the customer, on what the activity is. And then two, it's a little bit more difficult to match out the two journal entries in accounting software like you would with an invoice and payment. Meaning, if you have an invoice and you make a payment connected to that invoice, the invoice is now closed. So the journal entry can cause kind of problems when it's not an actual invoice. I won't actually record it right now as the reversing because we'll keep it as of 2/28. And you'll note that that as of the 2/28 date, we're at the 22/7/01. So if I go all the way to the left, the 22/7/01 matches the year-end date, the 2/28, and then it doesn't match the 3/01 because I didn't record the reversing entry because I'm going to keep the adjusting at the period end date. And then on the inventory, we have a similar kind of problem. Notice the accounts payable, you could have a similar problem on the sales tax payable, because you have that sales tax widget, so you got to be careful of that. You might make another sub account for that one, just so you don't mess up the sales tax widget that might be in accounting software to help you to calculate the sales tax. And then down here, let's make this indented. We have the inventory. Now the inventory, even QuickBooks does not force you, even if you're doing a perpetual inventory system, to enter an item when you enter like a journal entry. Meaning, if I did this transaction up top, which is mirroring what happens with an invoice, the system doesn't know what inventory unit, actual physical inventory, the unit of inventory to track with it, because you're not using an item to do that. So that's going to throw off your ledger and your subledger. And we're okay with that because we're going to reverse it and then we'll be back in balance. So the inventory, when I did the adjusting entry, we didn't adjust the subledger at all. So let's take a look at the inventory. Notice I'm at 4346 after the adjustment, and then 4746 after the reversal. So if I go back to the inventory subledger, way on over to the right over here, you can see we're off from as of the end date 2/28 by the $400. We're at the 4746, which is the place that we should be after we do the reversing entry. So this subledger, I didn't enter the detail, which would be a decrease here of the inventory for the adjusting entry, but we just left it off, and then reversing it afterwards, we just left it off the subledger so that, again, it doesn't show in the detail, doesn't mess up the inventory tracking. And once we do the reversing entry, we'll be back in place. The subledger will basically line up at that point in time. So we're just going to leave this one as is. Those are the things you got to kind of be concerned with anytime you're doing adjusting entries related to like an account, anything that has a subledger like that, the accounts receivable, accounts payable, sales tax payable, possibly inventory, whether it be a correction of something or some kind of just accrual adjusting entry like this, and you're then going to ask the accountant to put it into the accounting system. You got to think about, okay, how's the accounting system going to deal with the subledgers, and how can I make that as easy as possible, not to mess up the accounting department and have them angry at me because I did what I needed to do to get the financial statements correct for presentation purposes, but then it messed up their subledgers and so on. So here's where we stand with regards to the trial balance for the year to date, the ending period as of a cutoff date, and then our reversing entries as of 3/1, the first day afterwards, thus far.